So the $50 now is $70. Now you have $70. You have more leverage, more equity to risk a little bit more. Now, all you do is you're still looking for another high probability trade setup. Remember, if you're trying to flip an account, your focus should be on high probability. You shouldn't be trading every random trade because if you're taking every random trade, you're going to end up blowing the accounts. So all the trades you'll be looking for should be high probability. You should be looking at higher time frame points of interest, like the weekly, the daily, the 4 hour should be points of interest. So please, everyone, if your background is noisy, please, I'll highly recommend that you mute yourself, please. So now this is just one example, and I'll show another example, and we'll use another pair to show more examples. Now, look right here. This is weekly time frame, and on the weekly time frame, the market left another fair value gap right here. Seeing that fair value gap, all you're doing is you're scaling down and you're waiting for a 1 hour BOS. And with that 1 hour BOS, you also wait for 5 minutes for precise entry to get a higher risk to reward. So right there, you can see price coming into that position. You go straight to 1 hour time frame. And on 1 hour time frame, you're looking for the same thing, a break of structure to the downside. And right here, you have this low, created the new high, created this high right here, and then we throw a break of structure down here. After breaking structure, you're looking for your entries. You can use the fair value gap as your entry right here, or you can use the low. It's entirely up to you. And your stop loss will be the overall high right here. And that'll be your first entry. And your second entry, all you're looking for is price coming up here and breaking structure again. And you're looking for another second entry. And right here, you can see that the market came up, created a low, created a high, and it broke structure again. With the moment you see this break of structure right here, you're looking for another entry, and you're using here as your entry. Right here will be your entry. The low that got broken will be your second entry. And this high right here will be your stop loss. And both trades, you can target a 1:2, or you can even target a 1:3 in this case, because you're using, remember, if you're using a higher time frame, you can have a higher target. Now, this is from a weekly fair value gap. So now we can even target a 1:4 or even a 1:5. But in this case, let's just target a 1:4. And right here, this is the first entry, targeting 1:4, second entry, targeting 1:4. Now, let's say we're risking 5% of the, let's say we're risking 10% of the account on both trades. First one, 10%, 10% of $70 is $7, and 10% again here is $7. So that's $14. Now, this one right here, $7 times 4, that should be around 14.28. That will be $28 times 2. That's $56. So your $50, you've taken it from 50 to 70, 70 to 128 with just two setups. You've literally flipped the account, and now you're even about to double it again just from two setups.